Hi traders, and welcome to another edition of Trading Tips. I'm your host Jared Levy, and our sponsor this week is firsthourtrading.com. Check them out and you can get a free report if you go to their website, firsthourtrading.com. These guys are awesome. They'll teach you how to make enough money in the first 59 minutes of trading to take the rest of the day off. firsthourtrading.com. Let's get to the good stuff. Real quick here, bio for you guys that are new to Trading Tips. I'm Jared Levy. You can check me out at jaredlevy.com. I'm an author of 2 options books, a former market maker, a TV personality on Fox, CNBC, Bloomberg, Al Jazeera, and many others. And I'm also a strategist and money manager. So you're getting information, hopefully from a good place. A lot of the folks that are in this industry, they may not have any real experience, but I can assure you that here at Trading Tips, you're getting real-world experience and real-world examples. All right, this week we're going to talk about volume tactics. It's another chart attack using volume as a tool and a warning, believe it or not, sometimes for your trading. Volume can also be the roadmap that helps you follow along trends, and you'll see what we talk about when we go into the practical application for today. So let's talk about volume for just a second. Real great quote, actually a friend of mine came up with many, many years ago, and he used to say volume is the cause and price is the effect. He said it slightly differently. I've sort of tweaked it a little bit, but when you sum it up and you think about it, without volume, you wouldn't have any price movement. It takes volume. It takes somebody stepping into the market to move a price higher. At the same time, it takes somebody stepping into the market to sell to move prices lower. All right, volume essentially is a transaction. One share, basically, that is transacted between a buyer and a seller. Just because there's a ton of people who wish to buy or who are thinking about buying or maybe have limit orders out there that aren't getting executed, that doesn't necessarily mean volume is increasing. Okay, so it's the number of shares transacted over any given period of time. A lot of people tend to look at daily volume, and I think that's probably a good place to start. Some of you might want to dig a little deeper and look intraday, and I'll show you why it might be important to not only look at daily volume, but also to dig deeper and look down at the intraday volume. Interpreting these volume trends are really a key part of your trading arsenal. I mean, they are an integral, necessary part, or it is a necessary integral part of your trading. And what I mean is by looking at volume and understanding volume trends, you can further solidify, you can further confirm, these other indicators we talked about. You could talk about, for instance, moving averages. Noticing volume trends, identifying volume trends as a stock moves towards, through, or is hitting its head on a certain moving average, you're able to say, oh, you know what? Yeah, like obviously market participants saw that moving average. They either were or were not comfortable with it, and you can see that by the volume. We'll identify later on some of these trends in an actual chart, and I'll help you to identify exactly what I'm talking about. But again, volume is so key. Please don't ignore it. Let me give you some real quick tactics here to take with you. Number one is volume should be stable or increasing in a strong trend. And again, once we get into the practical application, I'll show you an example of this. Volume should be consistent with your thoughts. If you're feeling more and more confident about a stock that's moving higher, you should see at least stable volume in the marketplace, or preferably some increasing volume. Now, it's important to note that it's often, once a stock has been rallying for a while, you'll see volume start to dissipate. And the reason for that is, people begin expecting a pullback. And when you start to see that volume really drop off from its average, and I'll talk about that in just a second, that might be a cue for you to maybe move on or put a stop loss in place. Volume spikes can be a huge warning or a clue for you to look deeper. In other words, if you look at a chart and you see a big bar of volume or a big spike in volume, you should be immediately warned and you should be immediately curious. What is going on? If it's happening the day you're looking at the stock, you should immediately go to the news and see if there's an earnings report or some sort of event that's motivating the stock to move, to trade this much. All right. Another thing, if you're looking back on a chart and you see volume spikes, dig a little deeper, look back at the news and see, A, what caused those volume spikes, and B, what happens when the stock tends to spike in volume? Is it typically during a sell-off? Is it typically during a rally? And again, it helps you to understand the behavioral characteristics of that stock. It's also important to place a moving average over your volume bars. And yes, a lot of charting packages allow you to do that. So in other words, if you've got the volume on the bottom of the screen, you'll drop a 20 period moving average. And I say 20 period because, again, that moving average will vary depending upon what chart you're looking at. And we'll show you an example of that in just a second. It's also important to note that most volume takes place in the first hour and last hour of trading. It's funny, our sponsor, firsthourtrading.com, they trade the first 59 minutes of the trading day, which if you look at an intraday volume graph, you'll see that there are a ton of trades that go off in those periods of time. And then generally during the middle part of the day, volume tends to generally dissipate. So if you're looking for the big action, you're most likely going to find it in the last and first hours of the day. Ooh, another thing, during those periods, at least, and I'm going to preclude the first 10 minutes of trading, but during the first and last hour of trading, with all that volume coming in, you'll generally notice that you will be filled quicker, and the bid-ask spreads will tend to be tighter. Obviously, if the stock is extremely volatile that day, that throws all that out the window. But keep that in mind when you're trading. Be careful during the lunchtime hours, as a lot of traders sort of get bored and they tend to widen out their bid-ask spreads, and you're not going to get as good of a fill. If you see sporadic or light volume, that could be danger. In other words, if you see one day that's 500,000 shares, the next day is 100,000 shares, the next day is 1,000,000 shares, you might want to look a little deeper into that company. There could be a problem there, and I would definitely say that that's a caution flag big time. Average daily volume of the stocks you're looking at should be at least 400,000 shares per day. Yes, you want to see at least 400,000 shares on the average traded per day. You can go a little bit below that, but generally as you start to dip below that, you get into low volume stocks. And the problem with low volume stocks is less predictability, higher bid-ask spreads, and other problems you don't want to deal with. All right, let's take a quick look at the practical application of volume trends here in the charts. All right, so first we're going to take a look at a stock that's got low and sporadic and really ugly volume sort of stuff going on here. This is the stock ATE. I have no idea what this company does. I definitely want to disclose that this is not a stock that I would most likely invest in. Take a look down at our volume bar, and you can see I've expanded it. Let me back the chart out for just a second here. And you can see that I've got there's a blue line that goes across the volume bars. That actually is a 50 period moving average. Again, you can use 20 or 50. I tend to use 50 just because it smooths things out a little bit more and really allows me to see those outlier days. So this stock, if you notice, tons of volume spikes. See where the volume really eclipses and gets out of that sort of blue area where the average is. I mean, they're all over the place. Okay, so again, take a look at this. Every time this thing spikes, first of all, the stock is just bouncing all over. It's gappy. What I mean by gappy is here the stock was at 15, it gapped down to 13 and change. And you can see that because the candlesticks are sort of disconnected. All right. Another thing, look at the volume in actuality here. I mean, this thing trades an average of 13,000 shares a day. Huge red flag. Imagine if you went in and tried to buy 1,000 shares of this stock. And at $10 a share, that's probably not hard for many people to do. I, again, wouldn't recommend it. But if you went in and tried to buy 1,000 shares with this thing only trading 13,000 shares a day, the price is most likely going to be influenced in a big way. In other words, you're going to drive this stock way higher or way lower. All right, so this is danger Will Robinson all over it. Volume spikes, low volume, gappy. If we look intraday, go to a 1 minute chart here. I mean, look at this thing. It's just a mess. All sorts of stuff. I mean, my charting package can't even draw it because there's periods where this thing trades zero volume. All right, look at this. I mean, if you have a stock that's going for periods with zero volume, again, that should be major, major caution. Let's look at a stock here that just reported earnings. AbbVie, and you'll see a completely different picture. Now, again, AbbVie Incorporated isn't a household name, at least not for many folks, but you can see the bars are connected relatively. In other words, they're not really gappy. They tend to sort of, be more fluid. The volume, look how much nicer and cleaner that chart looks. Now, of course, we are going to see spikes. Let's go ahead and move down into the volume area here, and you can see there's our 50-period average. And sure, there's tons of times when volume is increasing or decreasing. Now, take a look at this. Here in this last trend, let's go back to December. Actually, let's go to late November going into December. And you can see that as the stock was trending higher, look at what the volume was doing. The volume was following along with it. So it was almost sort of a cue that, hey, people like, the market likes this trend. And what's interesting is as the trend started to die right here around the 12th of December, you could see volume sort of trailed off and then the stock sort of went flat. And what's interesting is volume, believe it or not, really died out here in late December. Now, obviously, that's going to be partially due to the holiday break, but you could again sort of make the case for volume increasing and decreasing. Here we are again. Look at this. A nice run up here in October. Again, volume was on the increase. You can see where my cursor is at the lower part of the screen. Starting at about the 11th of October, going until about the 18th, and you see volume drop off. That might be your cue. Hey, this trend might be coming to an end. And sure enough, it sort of slowed down and then backed off. All right, let's take a look at some spikes here and identify what we have going on. Now, you'll see that the spikes that tend to break through on AbbVie, they're actually more to the upside. They're more greenish or up-day spikes. And that's kind of interesting because generally markets tend to panic as they're moving lower. But AbbVie, remember I told you, get to know your stock. This stock actually sees people flood in when the stock is peaking or moving higher. All right, if we move further back in time, here we see a big down day with a big volume spike on the 28th of June in 2013. What you might want to do if the stock had a big move, which we can see by its red candle here, and a big volume spike, that might be an earnings day or some sort of an announcement. Now, AbbVie is a biopharma company. They're most likely going to have a lot of sort of, announcements and such, right? They're going to have a lot of FDA announcements. They're going to have product releases. So you should really be doing your homework and, again, watching for that volume. Let's go intraday for just a second before I wrap it up and take a look at intraday volume and what can happen. Now, this morning, AbbVie released earnings. You see the big gap there. Look at all this volume taking place in the first. This is just 5 minutes, guys. Let me open this up to a 5-minute chart. It'll give you a better picture. All right. Actually, if you really want to have some fun, let's go 10 minutes. And here you can see those peaks and valleys I was talking about. Remember how I said these are 10-minute bars now. Every bar is 10 minutes. Look at all the volume, how the volume sort of, happens at the end of the day, and then also at the beginning of the day, and then during the middle it sort of dies out. These are very interesting trends, and they tend to carry through throughout most stocks. Again, if you have intraday volume spikes, that might be someone, an insider buying or selling. It's a trigger for you to look at the news. All right, volume is an awesome tool for you to learn from. It's an awesome tool for you to use as a guide, as a warning, as a, basically a roadmap to your trades. All right, guys, and do not ignore it. Use it in conjunction with everything we've talked about in the past. All right, guys, that's going to do it. Again, I highly encourage you, please visit our friends at firsthourtrading.com. They're awesome. Firsthourtrading.com. Again, these guys will teach you how to make enough money in the first 59 minutes of trading to take the rest of the day off.